Good morning, everyone. This is the KICA Finance Committee meeting of the 23rd of June. I would like to call the meeting to order. We have in the room, we have Paul, Dale, Larry, John, and David, and we have Fran and Mary Ann. Is Michael on the line also?
Yes.
I'm here.
Yes. Hi, Michael.
Hello, Paul.
Okay. I think that is it. Okay, so the first item on the agenda is to review the minutes. So let's go to the minutes and see if there are any comments from the members. Okay, while you're thinking about that, I had a couple of points that I wanted to make. So on the second page, I just wanted to observe, there's a paragraph here that references David's comments, asked if we will post the entire 600-page reserve report. So we've talked about having that available if members are interested in it, but we think to post it regular way could cause confusion. The salient information is going to be in the KICA reserve report, but if people want to see the minutia, which is to say all the components, I certainly have no objection to that. I would just observe that, and this was Shannon's suggestion, we're changing the nomenclature a little bit, and we'll see that hopefully when we get to the draft documents. But we're referring to the consultant's report as the reserve study, and we're referring to the comprehensive reserve report as the KICA reserve report. And that is the report that has both the revenue and the costs. And that will go to the Finance Committee and then ultimately to the board for adoption.
So did you just say that we're not posting that? Is that what you got? Make it available?
What I'm suggesting is it not be posted, but that if someone is anxious to see it, we would make it available.
Is that something we would vote on, or how would we?
Well, we can vote on it. Do you have a different perspective?
I just think that in the interest of, transparency, it's, in the modern world, posting when the document doesn't cost any money. We've historically posted those things. There are some people that love to look at detailed things. I know it generates questions for us, but so I would just I would come down on the side of historically that we've done it and that it's just a transparent thing to do. But if the sense of the group was that was unnecessary, that's fine too. But
I'm like, how many have you gotten? Historically, has there been much, questions or things after these get posted?
Are you asking me?
Yeah. It's honestly been a year. Yes. So.
Honestly, the interest from the membership in the financials of the organization have been very minimal. As you can see, is the number of people in the room, and I personally haven't answered any questions with regard to this or many other financial issues.
David, to your point, I'm all for transparency, and that's why if someone is interested in seeing it, I have no objection to them seeing it. The issue that I'm more concerned about is that the reserve report that the consultant prepares has revenue projections.
Mhm,
They aren't our revenue projections.
mhm.
It's sort of their formulaic revenue projections to meet some funding level, and I forget exactly what their mechanic is. So in some important sense, these two documents are not going to be in sync. And while I'm in favor of sharing, I have no, this quote unquote 600 pages is, all the major components and their remaining useful life and so on and so forth. If people want to see that, that's fine. But I am concerned that if they look at it carefully and then compare it to the KICA staff report, they're going to say, well, gee, it's different. And it is different because they have no basis. They have no basis for creating the revenue forecast. We do. And so that potentially that is a source of confusion. Now, we can deal with that. We can just be responsive, but I don't think it's a super big deal, but I am hoping that in the reserve report, the KICA reserve report that we prepare, it will be responsive to the community. So anyway, it's not a huge issue for me, but those were my thoughts.
So those were the same comments I made the last meeting on a reason not to post it. One alternative would be to just pare that report down to simply the cost aspect, the infrastructure component portions of the report, and not include the revenue streams, projections, all that, which then would tie and sync with the report that we've issued.
But the report that we've issued, that is going to be made available.
Oh yeah, that's already, well, I think it's already posted.
Yeah.
It would take a little bit of work on my end to generate that without those components, but it can certainly be done pretty efficiently.
Is there anything proprietary, quote, proprietary about that study that got in the wrong hands could be problematic?
I don't think
I
so.
can't think of any.
I don't think so.
Is the nature, so what we engaged the external firm to do is primarily look at the assets, help us assess replacement costs, give us some external view about, those sorts of things. And that's the primary goal of that report, or is there an element of that report has an assessment of the overall reserve adequacy, or no?
Well,
it does, right? It does. It comes down and says you'd have to fund this at the certain rate, kind of thing.
It's
Should
all
we-
up to us on the funding.
So should we just scope down what we're asking these people to do?
We always had that option.
Yeah.
All we're dealing with right now is debate over, we've historically done this, now we're doing this, and what should we, so for the last 10 years, we could have just included the cost elements of it. They're not saying, here's the report that you have to publish. They're saying, hey, it's your report, and this is what we can provide you, and that's what was included, right, in the past, historically. So my orientation is, we could have them just issue the costing side of things with useful life and all that type of thing. And we utilize that to formulate our report. And then what's published on their end is the detail of all the costing side of things.
Hey, Dale, that makes
I would
sense
just-
because,
sorry. Michael, go ahead.
I say that makes sense. That, in the accounting sense, when you publish an audit report, there are pieces that you can publish that don't include some supplemental schedules. And maybe that's the easiest way, is just to give the raw data without the supplemental schedules that they're not really opining on. They're just assuming. And maybe that way you kind of fulfill both. You're not taking anything away that you've historically done.
I agree with Mike and Dale here as well. I mean, I think that makes sense to show the costing. I'd also say in broader strokes that last year we were I would say very disappointed as a committee in the scope analysis and information provided by the reserve group. And I think if it's happens again this year, I don't know if it should happen again this year, but we have to seriously make some adjustments because that was not good last year at all. And getting
Well,
that
as you
information.
recall,
Yeah, sorry, go ahead, Dale.
Fran, we didn't have them present at all this year.
Yeah.
So that was somewhat in response to that, but also taking on more of a responsibility to generate the actual report that we're now posting and basically just relying on the specialists for what it is that we need.
Dale,
Is
did
there-
they get in and do
No,
like
they
an
don't- they have
on-site?
no insight into our revenues at all.
Okay, so there's information in that report that's just not valuable, and so let's just take the pieces out that's not valuable and stick with just the cost piece. I mean, that makes sense to me.
Dale, did they do an on-site this year then, or no?
Yes, sir, they
Yes.
did.
Oh, okay, they did. Okay, great.
Okay, so I guess to try to resolve this, I don't want to post a tampered engineering report. I definitely do not want to do that. Their report is their report. Although I suppose we could put an edit on the front page saying that we have extracted certain material from this report, which of course will raise red flags. I don't know, Dale, maybe we could ask them.
They can reissue the report.
They can
without the
reissue the
revenues.
report, yeah.
Yeah. I mean,
Maybe that's the way to
And
do
they
it.
won't.
You know
have
what,
to-
Paul, and maybe this might be an easier way to do it. When we did it as an audit firm, you put an explanatory note that you're not including supplementary schedules. They can put that report to say, we're just doing the analysis of the assets only.
Right.
They can scope
I
in
think
with their
that
report.
that's a reasonable plan, because in fact, they have no insight. They have no relevant knowledge about what our revenue stream components are or what they're going to be now or in the future. And so having the report just focus on asset quality, remaining useful life, cost to replace, that's where they bring value. Okay. In the notes having to do with engineering and design, engineering and design funds come out of the reserve, but Dale backs it out of deterioration of asset calculation since it's not an asset. Okay, I had a question. So if we do engineering and design for a project, for a new asset, or a improved asset, then the engineering and design is part of the cost base that we look at, Dale? I'm trying to understand how the engineering and design funds cost is included or not included in the reserve study.
So there's allowances included in the component list for engineering design. And initially I excluded those, but they've since been added back because of the nature and the discussion that we had, because of their nature and the discussion we had.
Okay.
So all of those costs, which are included in the reserve specialist reports, have been accounted for, and both reports, the specialist report and ours, syncs from a costing perspective.
Okay, perfect. If we do engineering and design work for a project that ultimately doesn't get done, those costs would not be included. Is that correct? So let's say we do engineering and design work for a new kayak storage, but at the end of the day, we don't end up doing that project. Those costs will not find their way into the component.
No, because the component's not
Does it
part of the
exist?
reserve.
But,
list.
okay, I just wanted to be clear. Okay,
Yeah, because there's nothing to add.
there's nothing to add. Okay, great. Okay, well, those were the only comments that I had in terms of the minutes.
Do you want
Right.
your minutes changed to reflect that, or was you just following up on items from that?
No, it was just a follow-up on my, a clarification
Okay.
for me, Shannon. I don't
Thank
think we
you.
need to change the minutes.
Perfect.
It's all right, reserve. We're just going through the minutes now. That's fine. It's for later. Thank you.
Okay.
So you want to vote to approve the minutes?
Right, so, all in favor of adopting the minutes? All in favor?
Aye.
Any opposed? Okay, deem them to be adopted. Okay, the next thing on the agenda, item number 3, Finance Committee member update. So Debbie Diddle, reached out to me last week and said that she needed to step away from the committee due to personal commitments. And I told her I was very sad to see her go and that she'd made a meaningful contribution to our discourse. And I was grateful for her help, but she has elected to step away. The other thing is that the end of this year, third, fourth quarter, we are going to be working to identify new candidates for the Finance Committee. We have people rolling off. We have some vacancies that we want to fill. So Dale and I have that responsibility to put our recruiting hats on. So what I wanted to say was the existing members are the best ambassadors for the committee. So if you have individuals, friends, neighbors, residents who you think might be qualified and helpful to be on the committee, I would be delighted for any suggestions that you might have. Okay, so that was that. The next two things, the financial controls manual, potential updates, and the reserve fund policy potential updates. Just for context, I think we have made a major step forward in terms of how we're reviewing our reserve MR&R reserve study. Dale has spent a lot of time on this. Jody has spent a lot of time on it. Shannon has spent a lot of time on it. And I think it is a major improvement. And not only, it's not just a superficial or a format difference. I think we've made a major shift in terms of explicit responsibility, not implicit, because implicitly the responsibilities are always there, but an explicit shift in responsibility, and also in the content of the report, and a separation of the analysis into two pieces: the engineering analytical piece, as we just discussed, and then a more comprehensive piece that includes both the technical and operational input as well as the revenue forecast. So I am very pleased with where we've gotten to. The changes that I've made, and I got help from it, but the changes that I've made reflect that shift. I also made some edits to be a little more clear about roles and responsibilities, who's doing what. And I also added some language relative to the omnipresent issue of a funding level, which we'll talk about when we get to that draft. But that's just for context. Okay, so why don't we go to, and then Dale, overnight, I don't know when he did it, but overnight, Dale added some edits as well. So let's let's go to the KICA Reserve Fund Policy Draft Document that has, if you have it in front of you, it has my changes in red and then Dale's changes in blue. Now, I don't propose that we grind through this. This is not intended to be a drafting session. But if I or Dale or any of you have any comments about any of the edits, this would be a good time to do it.
It's a little strange on the shared screen, the edits are actually reversed.
They're
Mine are-
reversed,
yours are
right?
blue.
Oh,
Yeah.
perfect.
I'm not sure why
Okay.
that occurs, but
So just in terms of process, and this is an important point. In terms of process, so today, hopefully, we will get input on these draft documents, these draft amendments. Then at the July board meeting, I am going to ask the board to adopt the KICA Reserve Report, endorse the KICA Reserve Report, and consider changes to our two policies, the reserve policy and the FCM. And then in August, and then we'll post those to the community. And then in August, the community will have had a chance to see these proposed policy changes. And in August, I will ask the board to vote on and approve the policy changes that we're contemplating here and that I will share with the community in July. And then in August, hopefully the board will endorse those and approve the amendments to the policy. So that's the process side of it.
So Paul, could I ask, send them a member, and I'm asking, what is the rationale behind these changes? What is the intent? What is the purpose?
Right.
Can you sum that up, please?
Well, I'll do it. I will sum it up. So there has been a change in emphasis relative to the respective roles and responsibilities associated with the reserve report. The engineering historically, again, maybe more implicit than explicit, but historically, the reserve report was prepared by our engineering consultant. And that's what we discussed, and that's what we posted, and that's what was available to the community. Now we're saying we're going to emphasize the responsibility of KICA staff and the finance committee to have a KICA report that has input from the analyst, the consultant. So it's a change in emphasis. Okay. And I have taken the opportunity to clarify and perhaps emphasize the various roles and responsibilities of the engineering staff, of the KICA staff, of the finance committee, and of the board relating to the reserves, the reserve study, and the funding level.
Okay, makes sense.
That was my intent for these amendments. And in some respect, Larry, because there are now these quote unquote two reports, we have to just to avoid confusion. But there's a bigger purpose there. Okay.
Okay.
We are in this middle ground where we still have numbers that are being put forth by a firm that's not expert in those numbers. The part of their report that they're experts in, and actually that we rely on, is the engineering and the replacement. And I think part of the things that I think Bran was talking about, how unsatisfied we were last year. I think part of the thing that was so unsatisfactory is when you started talking to the engineering firm about the forecast and the revenue and the present value, you could tell that they weren't experts in that part of their.
Well, yeah, I was gonna ask earlier, maybe it's the same question of do we want to change the scope of what we asked? I mean, is it nice to have information from them, and maybe they're gleaning that from work they do with other, homeowners associations, et cetera. But on the other hand, if it does create this confusion, maybe we when you go back to them, we kind of figure out a way to bifurcate a little more what they're providing, or the comment about schedules or something, because that does seem to still be a challenge, which is what exactly are we using that report for, and what parts of it are we using it? I don't know whether that makes sense or not. Maybe a little bit more, not per se in the fund policy, but just in our direction to the engineer.
Yeah, I agree with you. I think that we should probably have I don't think we need a special group for this, but I think we should discuss what exactly value the reserve group brings, and reserve research, or whatever the team brings, and what they're supposed to deliver to us. Because I think they can deliver everything, but if we're not going to use parts of it because they're not experts, then I think it's kind of useless in many ways to have them even look at that realistically. If we're not going to use it.
So from a staff's perspective, there's no confusion whatsoever the role of the specialists.
Right.
And the
And I don't think
revenue
there is
side.
among us.
No, I don't
at
think,
least.
I think
but-
everybody here is
but
in
what I'm-
agreement on it as well.
What I'm leading to is that the revenue portion is just a plug and play. We give them from their perspective. So we give them what we expect our balance to be, what our revenue is expected to be, and they just plug and play. And then they deliver, because it's kind of standard procedure for them, they give us their scenarios with regard to the forecasts on revenue, expense, and all that. Going forward, we would just say, we don't need this component. Don't bother. We have the costing side of things is what's important, and what we utilize their expertise for, because they do have a database, they do have experience, they do have all the things that they have at their fingertips that we don't, that will provide us with more accurate and reliable information with regard to our components. So from my perspective, we're in a good spot with them. They do provide a service that we rely on and should rely on. And we just need to inform them that this is what we expect from them.
Isn't it the
So
useful
John,
life?
so if I could just sort of add on to John's question. It actually is a very good point, because there are things, and Dale just hit on one, that would be value accreting for us. We have one sandcastle, right? In theory, they have 1,000
Oh,
sandcastles.
I'm not at all questioning the
Right?
value of the report. I'm just suggesting that if there's parts of it around the revenue side that are creating confusion or really not us, then we could just say,
Take them out of scope.
take them, just
But
give
I-
us a report that
Easily
only shows us the outflow side.
But I think
The
there
inflow
are,
side, we'll take care of it.
but I think there are things that we should explore that maybe they can bring to the table, and maybe they can't, such as material science improvements, strategic maintenance improvements, measurement methodology, backtesting, data mining, I don't know what, to be honest. But I think it's a fair question. Now, we don't pay very much for this service. And so if we want more, if we want deep data, we probably are going to have to pay for it, et cetera. But I agree. There's no confusion about their job is to help us get the best possible answer in terms of the remaining useful life and the cost to replace adjusted for inflation at any point in time. That's what we pay them to do.
But Dale, what do we actually use that they produce? And to Paul's assertion, is there anything that they could produce that would be useful separate from that?
Well, I mean, I think that would have to be a collaboration with them as to what other items or processes they can help with. I'm not, in a day-to-day type scenario, I'm not interacting with them. I'm taking the data that they provide. Jody and Ryan are more in tune with them with regard to the components, useful life, you know, current contracts that may affect the useful life and or costing. All that is more an operational, not a finance department.
And that, when does it initiate that, in the fourth quarter?
Well, you know, I can't speak specifically as to how often they collaborate, but it's ongoing. And
Okay.
yeah,
But
third, fourth quarter, they're working.
yeah, I mean,
interacting back and
What I was
forth.
trying to think about is, we want to set a time, sometime before they quote kick off their annual work, if that's the way. Maybe it doesn't work that way, but maybe that's an opportunity to kind of revisit, maybe Brandon, to your point, get a couple of people together, get a little working group together and say, let's just before they start their work on their next annual reserve study, if that's the way it
Yeah.
works.
So Shannon, I don't remember, we met with them, very initial meeting, was it in November, December? I can't remember.
Probably December timeframe.
We met with them
I mean,
and
we-
went through all the expectations, all
Yeah,
that.
I mean, maybe in advance, maybe a finance
Yeah.
committee in advance of that, we could have a topic of what do we want? And maybe we could ask them in advance, what else do you have?
Sure.
Right? And then we could decide if there's, you know, in conjunction with you guys, if you think there's some other value added information that they might have that could give us, and we could talk about that before we give them the mandate for the next report, if that makes sense.
I think that's reasonable.
And-
Do you agree, Shannon?
Sure.
I mean, I don't think we want to micromanage you guys. You guys know what you need, and I think I think on the engineering side, on the asset side, I mean, it seemed incredibly valuable and that they do a really good job. So to Paul's point, I mean, the question is just,
What
are
else
there
can we do?
additional
Right.
things they might do that could help our staff or not? And we can figure that out.
That's a
and move forward.
valid question.
Okay.
Noted. Okay,
I thought these were all your edits and as well as your edits on top of that were all, I mean, I think you succinctly explained kind of this evolution, which we all picked up when we saw the reserve report for the first time, you know, whatever that
Yeah,
was last
I mean,
month. Like, I was like,
practice-
oh, okay, finally, there's something that is very
Right.
clear and articulated, and hadn't
I
really
mean, this
thought
is
about
really
it.
just reflecting the practice. that we
Exactly.
just went
Yeah, so I didn't have any edits to this. I think it's
So
clear.
one thing I hear on the screen, Paul touched on it earlier with regard to what we're calling this. And he mentioned KICA Reserve Report. My orientation, what I called it in our previous documents, is Reserve Study Report, because Reserve Report, it could be financial, could be my quarterly financials, could be, so
Right.
I'm trying to be more specific with
Right.
regard to what we call this, so there's no
And
confusion.
let me
as
ask
to
you
what it
this,
is.
the thought is we do this annually,
Mhm.
so we could add that would differentiate it. It's the annual. It reserve, doesn't matter.
Yeah.
That's another way to think about it.
So that's,
Yeah.
anyway, I don't know, Paul, if you,
listen, whatever, Dale, whatever you decide is fine with
Yeah.
me. My only request, and this is obvious, just so that there is a distinctiveness about it that people appreciate the different purpose and authorship.
To some degree, if we change the scope of the third-party report, you could change that to be, you know, an asset study.
Sure.
Or something that wouldn't use the word reserve.
Yep.
So that
Yeah.
it would be even clearer, but, you know, we can cross that bridge, you know, when we come to the scoping thing.
I would like to go to the FCM. And I think it's on, oh gosh.
Paul, before you go there, do you want more comments about the policy or?
Oh, sorry, Marianne. Yes, please.
So just two things quickly. One is I really like the suggestion that Michael made right ahead of the meeting about defining terms. I think it would make this a whole lot less clunky if we just defined a couple of these terms up front and then cross-reference them when you get to the financial controls manual or wherever else, you reference back to the policy. And secondly, when I read the first round of changes yesterday, under the delegation of responsibilities for the finance committee, I was really uncomfortable with the word endorsing the staff's assumptions, and I like Dale's change this morning to affirming. I think that is more accurate. I think vetting might be the best of all, but endorsing to me feels like you're asking the finance committee to just rubber stamp what's been done. And I'd like to think we're doing something a little more thoughtful than that.
I couldn't agree more. Done.
Thank you. Sorry.
Hey,
It's okay.
I just had a quick point also on the reserve fund policy under policy guidelines on the fourth point. So I'm just a little worried about that fourth point. We've reworded to say, you know, target should be between 50 and 100. We're now saying, you know, should be maintained to avoid these 3 points. I'm a little worried about the third point and what exactly is the disproportionate burden on future KICA members. I think that's like a very vague sentence or a very vague point. I'm just
Well, I guess I thought-
I'm worried about
I
that.
thought there's a little redundancy that 2 is in a way the same, it's the impact, right? I
Yeah.
mean, if we start to build up
Mhm.
a significant deferred maintenance, we are potentially burdening future members. So could you just live with 2 and not have 3, because it kind of results in the same thing.
All right, so let me try to explain the thought process. And I appreciate the fact that it would be much easier if we just said 80 or 90 or 100 or X%. And in fact, in the policy today, it says 50 to 100. Now, I am not in favor of that. I think there ought to be more clarity from the board and to the community. It is true, and the various policy language recognizes that this is art and science and art. Okay, judgments are being made, and so there is some logic to saying 50 to 100, because who knows what is going to happen next year, let alone 20 years from now. So there is some logic to that. However, the third bucket, which is not to disproportionately burden future homeowners, is an important one, because it would be easy, quote unquote, easy for a board to underfund. And the implication of that underfunding could be that in the future, assessments would have to rise more than the rate of inflation because the fund wasn't adequate. It wouldn't necessarily lead to deferred maintenance. It wouldn't necessarily require a special assessment, but 5 years from now, 10 years from now, there's a little bit of a problem. And so rather than the slope of the curve being gradual, it sort of arcs up. And I think that's a breach of the board's fiduciary responsibility. And so what I tried to articulate in bucket number 3 was, look at there's an underlying principle here that the current members, you and I and our neighbors, we're enjoying the roads and the bridges and the sandcastle and the docks and the beach path. Okay. We should pay for that use. It should be a pay-as-you-go kind of phenomenon. And part of the pay-as-you-go phenomenon is funding the reserve. And if we do that appropriately, present members aren't going to subsidize future members, and future members aren't going to subsidize present members. So that's a long-winded explanation of why there are 3 buckets, not 2. Would I prefer to use a number? It would certainly be easier, but I do appreciate that from year to year, there's judgment involved, and we can't always predict, and we don't want to cause a crisis if the reserve drops by 4 points or whatever might be the case. But as a principle matter, as a policy matter, our reserves should be funded in such a way that we're not leaving a rotten nest egg for our children or our future owners. That's what bucket number 3 is intended to do. And I appreciate its narrative, not numbers.
Can I comment?
Yeah, I'm a
Please,
little
I've given you
confused
40
on.
minutes and I haven't had a chance to comment, please.
Okay, Larry, go ahead.
Okay, this is a point I was going to raise. It's a point of principle. The members currently have complained about fees over the last few years being high. We, during that period, have raised the balance of the fund from something like 40% funding in the past. Am I correct?
Probably, well,
Yeah,
years
yeah.
ago, sure.
To what I would call an adequate level of funding now. So it's a balance between being fair to the current members and future. And I think no purchaser of a property on the island, actually, most of them probably couldn't care less actually about the degree of funding, but no purchaser expects a fully funded, brand new, pristine development. And that's what we're developing. That's what we're presenting, because we're saying, okay, this, you're buying into a new regime that's fully funded. You disagree?
Yeah, this is funding
To replace.
deterioration.
Yeah, to replace.
It doesn't mean that
No,
we're
no.
fixing everything right now.
No, exactly. But effectively, we have a huge fund to put the island back into original state. So I think it's a question of fairness.
Well,
basically.
wait,
true
Larry,
either.
Larry,
Hmm.
when you say huge, what do you mean huge?
We have a significant dollar
We do,
investment
We do, that's
that
correct.
other islands don't.
But we have,
and I'm
we
just
have
talk-
huge infrastructure.
I know we do, and so
Okay.
do most of the islands, but I'm just saying it's a principle of fairness. Current members have paid, and they've been complaining about above inflation increases for the last few years. And now we're in danger of asking current members to fund, I think, to 100%. Because we're not giving.
Where does it say that?
Because you're saying disproportionate burden on future KICA members. So 50%, I think.
It's for their protection.
Well, I disagree. Anyway, I've made a point.
Okay.
So my thought,
Well, let me ask you this question. If you were to convert your thoughts to math, would that imply then that we should be at 100%? What is
So
putting a disproportionate burden
right,
on
so
future-
in a perfect world, John, in a perfect world, which we do not live in.
Yeah,
And if we have a policy that our reserve funding is the equivalent of a very scientific and very perfect user fee, right? You pay, every year you pay a user fee for the bridges and the roads and the sandcastle and the bike paths. Then you will be 100% funded. And if you read the analyst engineering report, they say that. In fact, what they say is the best funding is between 80 and 120%. Well, why in the world, to Larry's point, why in the world would you ever be at 120%? Well, in our world, we are dependent on the value of real estate for the funding of our reserves. So we have market forces that are beyond our control. And so there is a scenario where you could be at 100. But in a perfect world, John, if we had perfect information, it would be 100, 100, 100.
But can I just say a couple things here? One, the first point in the policy guidelines says that we should strive to create a consistent annual contribution to reserve adjustment to offset the annual deterioration cost. Doesn't that cover this point? I mean, to some extent. So if we're going to move away from a percent, which I don't agree with, I think we should just keep the percent funded. We could change it off 50 if there's more of a comfort, move it up higher. I'm totally fine with that. But we say that, the first point says that, and now we're kind of restating it. And I guess my issue is this disproportionate burden on future KICA members. It just doesn't mean anything. Like, what does that mean? For me, I disagree with you, Paul. I don't think we need to be 100% funded. I think if we did that and we're at 100, the members are going to ask for less assessments. If we're at 110 and you're still assessing at that level, I'm sorry, but I think that's going to create lawsuits, quite frankly, because we don't need to be that funded. And all of this, as we know, the reserve analysis itself, the reserve study, it's all estimates. No one knows what's going to happen like 10 years from now. So it's educated estimates, but I don't know. I think the first point covers us unless we're going to go to a quantitative thing. I would prefer to stay with a quantitative thing. I'm happy moving it up to like 75% if that's like 75 to 100, but I don't feel comfortable going past 100. I don't think that's necessary. And I think it would create a lot of pushback in the community as to why we're overfunded. And I agree with your points that it's possible, or maybe we're not overfunded, but I mean, I don't know.
Fran, I believe we're going to get pushback from the community by virtue of the absolute size of the reserve, no matter what. And so my hope is that the report that Dale and his colleagues have prepared will be readable and logical and absorbable by the community to explain what we're doing and why. And so I hear you, Bran, but I feel very strongly that when our reserve was at 45% or whatever it was, that was not prudent. The contribution to the reserve comes from 4 different places. It's not just assessments. And, you know, I don't know what the front gate revenue is going to be. I don't know what the CTR is going to be. I'm not lobbying. I am not lobbying or suggesting that we be underfunded. Absolutely, positively, that is not my intent. My intent is that we have a process that doesn't kick the can down the road. That's my intent. And I think for all HOA boards in America, this is a problem. No HOA board in America wants to deal with members complaining that the reserves are too high, and it always happens. And so that's why I used the language that I did.
Is there a compromise in here, Paul, where you have this language and then the follow-on sentence goes to Bran that says that we currently see this as a target of 50 to 100 or 75 to 100, so that people who need the words see the words, but people who are numbers people see the numbers. You're still giving your principles in there, but you're still identifying a target range.
Yeah, I mean, to me, you go 75% floor, right? You're really kind of just saying, what should the floor be? And I think everybody would probably say 50 is probably too low. I don't know that we would all.
Shannon, I'm fine with that.
I mean, if
I'm fine
we
with
were
that.
to say 75 to 100, and then we want to add the philosophical concept to it, maybe that's the right compromise.
I would be happy with that.
So, originally it was mentioned as a target, right? So it still could go, it's at total discretion of the board.
Yeah.
And so it still could go above and below,
Yeah, I mean,
all based on,
yeah,
on future expenditures, for example. We may have the next year, maybe $35,000 worth of expenditures that bring it down to
Right.
62%, but then it comes back up the next.
Right.
So it's all at the discretion. My thought I agree with your earlier comment. I think maybe even Brand's, with regard to, I feel like one addresses the disproportionate burden, because the burden is on future members, there's special assessments or assessment rates.
Right.
So to me, maybe an option would be to avoid future special assessments and, I don't know the exact wording, I haven't worked it out in my head. Significant assessment increases or assessment increases beyond inflation, or,
Right.
and then remove the disproportionate burden because it's ambiguous.
Right.
But we've already said that future special assessments and assessment rate hikes, that in essence is the burden on future, right? So it seems redundant. Those are my thoughts. And then potentially incorporate what Shannon suggested with regard to the target rate.
Right.
Okay, so let's do this. I understand and appreciate the feedback. So let's ask Dale and Shannon to parse this and come up with the perfect solution, which I'm sure we'll all agree with. Again, I think this may be one of the top 3 responsibilities of the board to get this right. And I, although I have no factual basis for saying this, but I think the overwhelming majority of HOAs and COAs don't do this properly. In fact, our reserve specialist says this, like, you know, we're so far ahead. Well, that's fine, but we want our strategic statement says outstanding stewardship. To me, those words mean something. So let's ask Dale and Shannon to craft something that incorporates your comments, and hopefully that works.
Final comment then, perhaps, before we leave this. The difference between 75 and 100% is probably 12 million, I'm guessing. I would prefer a fixed target of 75%. That's my view. I don't know about other people's views. Brand mentioned a fixed. What is wrong with the fixed target for the avoidance of doubt?
For the avoidance of doubt, a fixed target is problematic because because of the funding source, because of uncertainty of weather, the uncertainty of material science, and the uncertainty of our contribution revenue sources.
But that uncertainty applies to 100% as well.
It applies to whatever, or no number.
I agree. What are people's views, please? Could I just ask? Bran is for a fixed target. Anyone else?
I think 75 to 100 is the right way.
Okay.
It just provides some flexibility and volatility. It just seems to me that, I mean, again, to Dale's point, it's still target, right? It's not like it has to be this, so I get that, but.
My concern would be that then we're chasing a target. If it's
Yeah.
that well defined, now we're going, wait, we need to reduce the annual assessment because we're way above, we're at 82% versus 75%. So we can now, because that's the target.
It's a fair point.
So I don't want to be chasing a target. I'd rather have a range that then the board can assess current circumstances, future circumstances to say, this is where we need to be.
That's a fair point.
Yeah. I myself am fine with the range, actually. I just think we can anchor the range at a higher level than 50.
Okay.
Because I don't think 50 is appropriate. So I think 75 to 100 makes sense. The one other point I'd like to introduce is, do we need to state in here a remedy if we're not in this range?
Well, sorry if I'm interjecting,
No.
but to me, it's a target. And if we fall outside of that, it's still the board's discretion to say, listen, we're outside of the range, but these circumstances warrant staying at this amount, and therefore we don't need to raise or lower assessments or what have you.
That's fine, but do we need to memorialize that
Besides
in the
language
policy?
down before this talks about sufficient to avoid, there's an aspect there, which is like, if it's only if it goes to 74 because of some unique volatility, and it's gonna go back to 76, you know, no need to do anything.
Let me just read the first sentence, under delegation of responsibilities. The board of directors has sole authority and ultimate responsibility for all decisions relating to the reserve fund policy, asset replacement strategies, and all associated financial, operating, and execution elements, including reserve funding level.
Okay, so I'm again, I'm fine either way. We're not going to include in here, you know, this should be remedied within a certain period of time or something like that.
I personally don't believe that's necessary.
Okay, great. Thanks.
So the role of this committee would be to make, is just to report the facts, and, or do we have a responsibility to make some sort of recommendation as part of this?
Well, in this instance, David,
If it went to, like, let's say there's a market downturn, fixed income market drops, and all of a sudden this year, you know, because, you know, we market at 12/31 and happens to be, you know, 62%, right? And so the view of the group would be that, hey, this is either temporary, there's no need to do it. Do we have, I thought the question was, do we have some responsibility to articulate, you know, what our recommendation is to the board? Obviously, it's the board responsibility to do it.
Can we go back up to the first, when there a delineation of kind of.
I think the board relies on the finance committee for exactly what you just said.
I do too.
And it
Or
goes
should.
without stating.
And just to underpin that, it comes in the context of a KICA staff recommendation that is presented to us for our approval. And then if,
Yeah, I mean, I think that's the.
and then we send it to the board and we say, okay, you know, here's our recommendation, our being the finance committee. Now, as the policy says and should say, it's the board's decision. They can apply judgment and they should apply judgment, but we're telling them, look at, here's the report. We agree with the report. Here's what it says. Over to you guys. And that includes funding level.
So we're all agreed 70 to 75.
So what we're agreed with, or what I've agreed to, is that Dale and Shannon are going to work on language that includes both a numeric range and the principal in bucket number 3. Okay.
Is there anything else?
Not to get into too much minutia here though, but if we're saying the board is setting the percent funded target, then really, we don't really have on the finance committee any say in this, right? It's the board that's saying, hey, the target should be 100% to 120, you know?
And that's going to be true on anything really, but I think it's a powerful added burden on the board if they decide to take action outside of our recommendation.
Yeah.
It's always the board's ultimate responsibility.
Right.
As
Fair, it's
finance
fair.
is
I get it.
advisory, but it's rare that the board deviates from finance.
Okay, so unless there are other points on the policy, there is language in the FCM that is, I think, less controversial. And I just want to highlight the language, which I think is critical. The KICA Reserve study report will be used by the KICA Board of Directors for annual budgeting and long-term planning related to the association's infrastructure assets. Okay, I don't think that's drama. Okay, any comments on the FCM? Okay. Great. Dale, you have an assignment here? Okay. All right. Thank you very much. Valuable input. I appreciate it. It's not an easy topic. And I respect the dialogue. Okay. Item 7. Oh, sorry, item 6. So review of the 2025-2026 schedule. So first of all, thanks to everybody, including Dale, who's just returned from vacation, for this off-schedule meeting. The rest of the schedule are Thursdays at 9 o'clock. So that's back to quote unquote normal. I would draw your attention to the budget cycle that begins in earnest at the September meeting. So anyway, I think everybody has the committee schedule, and I make sure it's on your calendars. Okay, so that was that. Okay, the last part, I wanted to get your thoughts as to, in addition to our regular way, business as usual, important responsibilities, reviewing the financial results, reviewing the reserve report, reviewing the investment performance, what other issues or opportunities or challenges do you, as members of the committee, think we should tackle? I have put some thoughts down here, some from you, some from other people, some from me, but I'm interested in seeing if we can identify priorities that would make a difference in terms of the financial governance of KICA, being aware of a couple of things. Number one, anything that we choose to work on is going to require effort from staff. So I am very sensitive to the fact that staff have day jobs, not just sort of looking after committees and the board. They have real day jobs, and so I'm sensitive to that. But and I'm also sensitive to, you know, if you have an idea or for an initiative or an opportunity or a problem, it would be great if that idea came with a willingness to be a participant in the solution to that opportunity or the problem. So anyway, this is open committee discussion, and I'd like just to hear thoughts from the members as to items that we could constructively engage on during the remainder of the fiscal year, in addition to our regular way responsibilities that include the budget.
I think I would benefit a little bit from a real quick run through of kind of what some of these mean. So like I'm clear on number 2, controls audit, I assume means what it says. Self-insurance possibilities. What exactly?
Okay, so I'm happy to do that.
As we talk about them, I mean, we could go one by one, I guess, however you want to go.
So, and I don't want to, I really don't want to dominate this discussion, but I'll be very brief. Item number 2, reserve investment policy. Look, there is a policy, and it was created, and it was endorsed unanimously, or yeah, I think unanimously by the finance committee. To be just to be candid with you all, the investment policy troubles me. And it troubles me because I think our responsibility vis-a-vis let's just focus on the reserve, not the working capital cash that's invested short term. But the reserve investment has two purposes. Our goals are, I think, when I think about it, there are two things that I want to make sure. Number one, don't lose the members' money. And number two, hedge inflation. To me, don't lose the members' money, hedge inflation. That's it. We're not running a hedge fund. We're not trying to, be heroes. And so, to me, what I just described is inconsistent with our current investment policy. But that's just me. So I'm not saying it's wrong. I'm not. The policy was approved by the board. Not only was it was endorsed by the committee, approved by the board. But to me, as a member, it just seems out of whack.
What's
The target is 40% equity.
No, I know, but don't we look at this? Like,
We look at it every
We do.
couple of years.
yeah, didn't we just look at it, was it last year? Or?
We just approved it
Yeah.
this last year.
Yeah.
Could I add to Paul's comments? Because I thought long and hard about this. First off, what are our objectives? What are the qualities we want from our investments? I wrote them down and I agree with Paul, but I added to maintain the purchasing power. It's actually in our sort of statement of purpose. I forget the exact terms, but it is to maintain the purchasing power of the fund. We need liquidity in part. So if we need to draw down on the assets, we need liquidity. Not 100%, but
It's a
if there's an issue.
consideration.
If there's an issue.
Mhm.
Third, we need relative conservatism. To Paul's point, we're not a hedge fund, and I've agreed with him on the past. I don't always agree with Paul, but I agreed with him on that. And the last one is minimal cost. I mean, everybody knows that the cost of investments, and I think ours is reasonable, but I think it is important that we minimize costs because long-term returns are very dependent on costs. And I think our costs are sort of reasonable, and I'll take advice from people who are more experienced on that. So those are the four principles that I think.
But are those not already delineated?
No, two of them are, I think.
Larry, I personally agree with that,
Yeah.
with those 4 points. I think that's, now there is a theory. There is a theory, which is not, which may be an underpinning of the existing policy. I don't remember. There is a theory that says, well, we know, quote unquote, we know that over time, based on 100 years of history, U.S. equities do better than fixed income. There is, I mean, that is not a controversial, I think that is an accurate thing, and I don't think it's controversial. So there is a theory that, well, this is a long-term fund, and if we put, some equity in there, then maybe we can bootstrap the return and give our members some relief. So that's not a crazy idea. We're going to invest this money for you so that your future assessments will be lower, and you'll thank us for that. That's a theory. I don't.
Well, hold it
don't
a
think
second,
that's our
Paul. Hold it,
I don't
Paul.
think so.
Hold it a second. Hold it a second.
Yeah, I don't
Okay.
agree.
First of all, that's not a theory. That's the basic underpinning of all investments. You want a diversified portfolio. You do not want to put all your eggs in one basket. It's not a theory when you're looking at the historical quantitative data that underpins investing. So that's not a theory, that's just fact. And I think like one of the things we have to be mindful of here is if we are too conservative, you can look this up, there are a variety of pension funds that have been sued for being too conservative and not hitting their target. The target return of this is to hit inflation, right? That's the underpinning of this. Inflation, we defined it for a PPI calculation that we have that's generated by the government. So it is very hard to hit that purely with fixed income. Doing less when we could do more opens us to litigation. I'm not making it up. You can look it up. As I said, many pension funds have been sued for being too conservative. So it's not a theory, it's the basic investment principles, which is diversification makes sense. And I think the bigger question here is, if we are not comfortable with our mix, we can reduce our mix. But are we looking at this as a 1 year return, or are we looking at it as a long life liability stream that we have to match? And I think if you look at it as a 1 year thing and, oh man, equities are down 20%, we shouldn't have done this, fair. But if we're looking at this as matching off longer term liabilities, then we should look at it over a longer term and not at 1 year. We need to hit this. This is the operating cash is all in treasuries, right? Because we can't have any volatility in that. But in this asset, we can have volatility, So we don't have to be fully conservative in this. And we will not hit our return target that we have in place just with fixed income. So I think if the idea is to hit that return target, again, we are using inflation as defined by the Bureau of Labor Statistics. We don't have to hit that. We can change the target. But then we might end up having not accomplished our key goal, which is to meet these future liabilities. And the reason we have that target is because we said, okay, where are our future liabilities going to be? Well, they're going to be based on inflation. This was the best inflation metric. I can tell you we're not going to hit that target if we're just in fixed income. That's just the math of it.
So, okay, just so as a matter of format here, it was not my intent that we debate this today. I have listed a number of things that we might consider for additional deliberation. I'm not here, raising a flag. I'm just saying these are some.
That's why my question around timing was, we periodically look at the policy and the performance. So the question is, when's the next kind of formal timeframe for when we do that, or is it implied that we always do that?
I think my personal view, John, is a good question. My personal view is that implicitly we have that responsibility every quarter.
So when's the next one? Like, when do we?
The August meeting, I guess. Is that right, Dale? When we get the next investment report?
Yeah.
So maybe we talk about it then.
That's fine. I wanted to be candid. I did put this on the list because it's a personal view that I have, but the purpose of this discussion is this something that deserves additional study?
Let's just take it up when we look at the next results.
I'm with Paul. I'd prefer a study just to clarify everything. I'd be quite happy to join a couple of others to look at it.
Well, I guess the question I would have is, we have an engineering firm provide expertise on our assets. Is there, Brandon, I mean, you would maybe know, how do we get better information around how comparable entities manage their investment strategies? I mean, we're reliant today on our existing advisors. The question is, and I'm not advocating we do it, but if there is a need for sort of better context or what's best practice, is that something we should try to identify?
We have a policy in place.
Yeah.
Approved, as Paul had mentioned. And we've actually endorsed our investment advisor because we just last meeting said, let's extend them for another, whatever, 2
Right,
years.
right.
So to me, again, it's your guys' call, but to me, we should be relying on our experts
Well, I agree with that.
to keep us in compliance with our policies.
Right.
And we can still guide them in between with regard to anything that
Yeah,
they're doing.
I'm more saying, like, is there, like, if you were to go out and look at comparable entities, which I'm not sure there are that many, how are they funding their, liabilities? Like, in other words, it's not questioning, when we tell our advisors what to go do and how we want to do it, I'm not questioning that. It's more about how do we decide what to tell them to
Okay.
do, and whether there's other information out there that says, for large community homeowners associations, this is kind of how they've invested their money. I don't.
We can do that, John.
I think we can do that.
We can do that, John. I participate in large scale managers lists around the country. And so we can
I'm
pose
happy
the
also
question.
to participate if we just want to try to, without putting any burden on the staff. That's my concern, is like, we have a time frame and we have a protocol around how often we look at this and when we look at it. And we shouldn't be like, I think we should stick to that. And then if there's some information that we need to help better inform us around whatever decision making we need to make at the time that we usually make it, then let's go.
Okay.
See if we can get that.
Okay, I think that's a good idea. My guess is, and I think Shannon was perhaps referencing this, there is a very large organization called CAI, which is the Community Association, something or other.
Institute.
And they have a bazillion members, and most of them are small, and some of them are big, like us. And so it's possible that they have data that would be helpful. I used a couple of different AI engines, and I don't know whether what they told me was reliable or not, so I won't quote them. But that is another possibility, that we do some data research independently. But I think the best way to get your answer, which is a reasonable one, is through the CAI organization or through Shannon's contacts. Okay, so
I agree.
John and Larry,
One-
if you want to work on this, I think that would be.
Brand, I mean,
Wonderful.
you're probably the biggest expert on this, so what are your thoughts?
I think that's good to go through I believe it's CAI. One of the ways we looked at this is like also entities like pension funds that have a longer term liability. I mean, part of this, the big thing here was framed, what are our liabilities? Are they long term in nature or short term in nature? And, I believe our liabilities for the reserve are generally long term in nature. And so that's kind of, and that pension mix, I think, is pretty well known. I mean, we're not even near the typical pension mix realistically in terms of our equity allocation, but that kind of guided us. So there is a lot of pension material out there if you wanted to look at that as well. I think that's reasonable. But I also think like I'm Paul I think is a little biased, and I'm a little biased because I wrote that investment policy. So I can certainly opine, but maybe having a fresh set of eyes on it is a better approach in my opinion.
Yeah, it's a huge sum.
Okay, the only other one, maybe just to comment very briefly on a couple of other items that are on here. From time to time, members have asked the question, are we operating efficiently? Are we good at what we do? Are we efficient at what we do? I don't know the answer to that. I think it's a very tricky question. Again, part of if there is an answer, part of it is, unique to the kind of association we are, to the services we provide relative to other players. It's tough. It's not a bad question. Are we efficient? I think we are, I don't know.
Normally you look at that by developing some KPIs around, you know, where you want to be, what's the efficiency measures that you're looking for, right? And then you try to move yourself to those, to get yourself to those measures. So that might be something you could also get through this CAI group. You know, there may be ways to think about, like, head count per whatever, or, you know, you know, since I live in the KPI world, I'd be happy to help with it. I felt that same thing, you know, the people that I talked to about the budget last year, you know, not finance committee people, but people like, oh, the assessment's going up, you know, are we being efficient? There's just, you're going to get that, right? Anytime you have an increase in anything, people are going to be like, well, but how many people do you have? And so,
Well, I mean, Sharon, Dale, you guys are the ones living it. I assume you guys, that's a number one priority for you is efficiency. So, I mean, do you guys have a perspective on it, or how do you guys think about, you know, operating efficiency? I assume that's a big part of your responsibility.
Well, I can respond. Within my department, we're always looking for ways to be better. So just this past year, and it's ongoing, we implemented a new payables processing expense, and then we also implemented a new software platform for credit card processing. We're now currently implementing a budget software change. So all those should be clear indications. And we're also utilizing the annual audit as a litmus test with regard to how we're doing things. And the goal has always been, since I've been here, to have no comments, and that has been achieved. So I think
it's broader than just a finance organization.
I understand. I was going there
Yeah,
next.
but I don't think there's much on the
Operationally-
finance. Yeah.
Operationally, I know since Jody's come on board, they've implemented new platforms for exactly that, tracking projects, and part of which you can see on the front screen in most
Yeah,
days
agreed.
that charts progress, and
Right.
and he's implementing additional ones, which Shannon can probably speak to better, but without a doubt, he's even looking at the components and how that how maintenance and repairs can affect the useful lives, and how can we get better with that. So these are all discussions we've had at our leadership meetings on the staff side to say, how can we get better? And I'll let Shannon comment further.
Yeah, Dale's correct. One of the really attractive things about hiring Jody is his strong operational background. We wanted him to bring this type of fresh perspective to us, and he has done it. He challenges us all the time on some of our assumptions, and that's a good thing, right? We are working hard to make our softwares work better for us, as well as better for the island. That has been a primary focus for him. As Dale said, he has brought operational efficiencies to the operations side of the team in order to ensure that they're all working together and all working as one towards the same goal. So I do think we do it. I don't think we have a set standard, a set of KPIs that we look at continuously, but it's certainly something that we could, identify however many and say, these are the ones that we're going to look at, routinely. But mhm.
Shannon,
It
things
seems
like
like on-
accidents and things like that. But I think on Dale's area, I've asked Dale questions like, how much of your purchases are on, small purchases are on purchase cards, which is efficient. I think you've been through most sort of benchmarking type things that you can do in terms of
I mean, one
finance
option
functions.
is
It's
during-
more that area,
Operations.
operations.
I mean,
And I
one
think-
option would be like during the budget process, maybe once a year, if it is a question that members have at that time. The staff can just lay out,
Right.
like, what are the activities you know, how do we think about efficiency? And here are some examples of things that we do. And then if during that time frame we want to talk about establishing some KPIs, I don't really know, you know, again, I'm sure we can benchmark against other large, you know, associations if we wanted to around operating margins, or I don't know what those might be, but that's another option. But it seems, again, maybe that's a topic to take up as we get into the budget process.
But again, it's burden on Dale. I actually think our budget, I mean, I was in charge of budget processes, one of my jobs, for an organization of 16 billion with 120 factories. Dale's is best in class. I mean, we've got to remember, we're effectively a homeowners association.
No, that's what I'm saying.
We're not a huge entity.
That's why I think it's more about just a little bit more clarity than it is failure to do anything. To me, it's more, how do we, as we roll out the next budget, just give people a little insight as to how we think about operating efficiency. And here are some examples of how we've implemented things to improve our efficiency.
I think that's a good takeaway.
That's all.
I agree. I agree with John's point about that. I think it's more an issue of how you communicate that to members, and it seems like part of the budget process makes sense. The other question I would have is, if you're talking about cost efficiencies, I think it would be good. It would be good to know, like, are there any, is there any low-hanging fruit in terms of financial things that would make a big difference? And my guess is you guys have already raked over that, but if it's worth looking at what other homeowners associations are doing of a comparable size, you know, I'd be happy to take a look at that.
And I think to John's point, you know, when we're talking about the budget and creating the budget, 60% of your budget thereabouts is people, it's personnel.
People, yeah.
So we're always, those are some of the conversations we start first. Every department head has to defend if they're asking for more people. They have to defend it to Dale and Sarah and I first. They have to tell us why, what's the reason behind it? Why can't they get the work done with what they have? And then we have to balance it out across the company. And we're always looking at our overall numbers, and we're always looking at when we have a position come open, should we refill that position? Is it still the position we need? Does it need to morph? Does it need to go away? And so that's always something we're talking about. So when we get into budget, we're showing you all what are the changes year to year and what have we done. I don't want to just add staff and get up to 150 people because we can. That doesn't make any sense, right? You need to have the right number of people. For instance, last year we increased our H2Bs. That's great because we can fill H2B roles, and we struggle to fill low-level land management tech positions. So in increasing H2Bs, we reduced full-time capacity, you know, and it's those kinds of things that we talk about during the budget, because, you know, pencils and papers are great, but 60% of your budget is personnel, and that's where we have to focus. Certainly our benefits packages are huge, and a couple years ago, that's why we went to self-funded healthcare to try to control our costs. So those types of things are certainly going to come up when we talk about the budget.
One specific on efficiency that I
Yes,
think
sir.
we should look at, and it's very difficult, is legal fees. It's not efficiency, but I think it's a problem for us. I don't want to go into the numbers because we're public, but the legal fees are.
Legal fees is, it's an interesting topic. You know, we certainly had our couple years where we were having some problems going on, and we had to spend a lot of money on legal. But if you look at last year, we spent a pretty equivalent amount on legal, but we were doing heavy lift on governing documents.
Yeah, okay.
And so even though the numbers equate, it was two totally different things we were doing. Okay. And the board is very cognizant of the fact that they don't want to spend tremendous amounts on legal. They will talk about that. They will, all legal expenses go through me so that, 7 board members aren't all talking to our lawyers at $385 an hour. It depends. You have to look each year at what they're spending on.
And my final comment on Paul's list, I know he wants to move on, is I think it'd be a good idea, it's been mentioned twice here today, but on the points of revenue levers, I would like to understand, and I think we should, but what are our sort of long-term, not long-term, sort of medium-term income drivers in terms of new builds? So there's like revenue half, I presume, of Orange Hill people. There's 400 units at East and West Beach coming along. There's Ocean Pines, and there's Upper Beach Walk is still left. So it's a significant, there are significant revenue items coming up in the next 5 years. I think it would be a good idea to be cognizant of those. Paul mentioned we don't know our long-term income. I think someone else mentioned it today. I think it would be a good idea just to have an idea of where revenue is going in the future. Just big picture. Silence.
Yeah, I mean, I think, Dale, because I've focused on this, and you've done that analysis around, obviously, we spent a lot of time looking at it as part of the reserve study, and the budget is kind of longer term, and I think it's back to the reliance on real estate, right? It really comes down to, you think about CTR anyway, that's a big chunk of the source of revenue.
Right.
For the reserve, it's not so much for the operating budget, 15%, but I think it does really just come down to, and we talked about this before, like it's a scenario analysis that says, okay, if real estate sales drop, then what are your levers to offset that? Assessment being the most obvious. We've talked about possibly increasing the fee from 0.5% to something else if that were to happen. So I do think that, there's been a lot of, I think Dale's done a fair amount of work on it, but if we need to, again, maybe that's another one where we bring it up as part of the budget discussion, is looking at it at that time, just once a year, we reassess or do some scenario analysis around what ifs. It's not build a spreadsheet, kind of modify it pretty simply. I'm sure you've already got it in place.
We are approaching a point, and I think sort of Larry alluded to this, we're approaching a point, I think relatively quickly, where there will not be meaningful new development.
Right.
And so then it's a question of value and turnover. And so there is that inflection point. Now, whether that it means more or less revenue, over the next 10 years, it's really tricky. It's hard, but I do appreciate the fact, and I agree that Dale's perspective, goes beyond the budget. He certainly looks and thinks about real estate and, the next 5 years. So it's in front of us, but it is a relevant question because the nature of the CTR is going to meaningfully change, post development.
I would love if we were gonna do like if Dale needs any help, or if we were gonna do a separate group on this, on the key risk assessments, especially like the budget issues, I would be happy to join that group. I think this is like a very, very important point. And I really worry about what happens when this dries up or gets reduced.
Yeah. And I don't think it's that, well, in terms of the understanding of the big levers over the next few years, I think that's relatively easy. It's with the construction that's coming, it's the other stuff. I'd be happy to join.
So so thank you guys for that. This is another thing that I think we do implicitly. We, meaning the staff and the board, we are focused on key risk issues, but I think to do it maybe a little more explicitly in terms of, okay, what are the issues? What analysis can we do to understand the scope and scale of a possible risk range of outcomes and be a little more concrete as an association for our members. I think that would be helpful. It's not to say that staff isn't thinking about these issues, because I believe they are. But I think if we could be a little more specific about, okay, here we are, Q Island Community Association, what are our key risk issues and measures? I think that would be a step in the right direction. Okay. I'm happy with that discussion. Anything else anyone would like to bring up?
You had on your list the internal control review. And I know Dale's not gonna want to hear this, but it does seem like something that we ought to do every so often. And we just put a new AP system in, it's always, I think there is value, and I think our members would expect the finance committee from a governance perspective to really have some view, an external view about internal control, with not an every year frequency, but some frequency. So I like if there was a bust in in segregation of duties or something, and somebody was siphoning off money, people would say, "Hey, what'd you guys? How were you comfortable that that wasn't going to happen?" And I think, other than relying on you, which I think is obviously what we do, I do think it's useful to have something like that done periodically. So that would be my perspective, and I don't know that we need a big working group around that, but I do. My perspective is we ought to consider, engaging a firm to do that every so often.
My first and foremost, we're 1000% transparent and welcome anything and everything with regard to oversight or analyzing that environment. The whole intent, my intent with regard to the edit of the financial controls manual was to inform the finance committee of the internal control environment by providing all of the SOPs, all the procedures, the financial controls manual, so that one, as a foundation, the finance committee would be aware of that entire environment. And within the financial controls manual, we've talked about any significant edits to those procedures would be informed, you'd be informed on, the finance committee would be informed on. So that to me is a foundation that we should review that periodically, whether it's annually, biannually, whatever. And then I also rely on what the limited audit that the auditors do, which they do tests. And my orientation is, and I'm trying to take more of a 30,000-foot view or put myself in your seat. They do testing, and based on internal control testing, based on that testing, they formulate their procedures with regard to the audit and all that. If they find something within the testing that indicates that they should do more testing, they do so. And my orientation is that too should be an input to the finance committee as to what steps should be taken. If, for example, they had comments, they had internal control concerns, in their reports, then clearly, right, that should put up a yellow flag, if not a red flag. Mm-hmm. And then I think too, cost benefit, depending on the extent of that audit, external audit of the internal controls, should the finance committee review, okay, is it worth $30,000 for a 6 to 8 week internal audit or external audit of the internal controls? What will it provide? And, for me, it's, if there's indicators that there should be an audit, then by all means, to a certain extent, no money is too much to execute on that. But if there's no indications and so forth and so on, how does that weigh out and so forth. So my orientation is if this group and the board thinks that there should be an internal or an external audit of the internal controls, sure, absolutely.
So Dale, let me ask a question, and you and I have talked about this, so this is a little bit of a setup. Our audit, I think collectively and individually, we're very happy with our audit. Our audit firm, I think you told me that you had a conversation with them, or they had approached you or whatever about this idea of a controls audit per se.
I got quotes from them.
Is there a framework? Is there something that you could share with us that says, okay, here is our package, this is what we offer, ballpark, this is what it would cost? Is there
I would
something?
probably go back to them and ask for a reevaluation, so to speak, because it was probably a year and a half ago, or maybe even 2 years ago. So things may have changed on their end, but I think, Shannon, didn't you tell me the city was going through an internal controls audit and it was
They are
pretty extensive?
They haven't started yet, but they have hired a firm to do a controls audit.
And that may be more extensive than what we might do. I don't know.
Off
But
the
I
top of my
remember-
head, I thought it was 50 to 60,000, but that's trying to remember about a month ago, so.
Well, and I
So-
think ours could be a little bit less. Well, a lot less. But I was thinking the other thing, I'm sorry, Dale, I didn't mean to interrupt, but I think we have a chicken and an egg thing here. We need to make sure we lock down the financial controls manual, because that's what they're going to be doing their agreed upon procedures on. And I will just tell you, having been in my first audit on the other side as a CFO, not as a practitioner, the good housekeeping seal of approval to get that done periodically, at least with the partners here at this law firm, is something that they want to really see. And I think really it literally provides the umbrella, the protection of both the internal team as well as the finance committee and the board to have it done periodically. And Paul and I have had these discussions, so I know I'm just.
The only
preaching
reason
the
why I
choir.
see there should be an audit is to cover the board and the finance committee.
I
I
mean,
don't think you'll get much out of it, to be honest with you, because our segregation of duties is extremely limited. I spend a lot of time going through the finance manual, and I think that we've done our best in terms of segregation of duties, but how many staff have you got?
Well, staff of responsibility, basically 3.
Yeah, it's very difficult in an organization of our size to get.
But I mean, our financial controls manual, we just updated.
Yeah, exactly, and we
So
constantly
really,
do a
I
lot.
think maybe it could be just inquire, maybe one option is to say, try to minimize it, just to say, what could you expand during your normal audit practice, right?
They
Do it
would
that way.
Yeah, I
do
would
that.
look for a separate
They would do
engagement
that.
and a separate
Yeah.
report.
Oh,
Yeah.
So Dale, maybe as a
It might be an
takeaway,
agreed upon procedures report.
And agree, yeah, exactly what it would be. Yep.
so maybe as a takeaway, and maybe you could work with Michael Petreka, would be to go back to our audit firm and say, okay, do you guys have a separate function
They do.
that does this kind of work? And could you sort of give us an outline, not 50 pages, but maybe 3 pages, and what is involved and how much, for you know us and you know how complex we are. Just sort of frame the deliverables and the invasiveness and the time and ballpark dollar signs.
That's-
I think that would be
Just for
wonderful.
reference, that's what I did the last time, and they referred me to another quote unquote department.
Yeah,
And then they gave me they gave me 3 options.
okay.
With what it was included in each, and I could just resurface that, and I could share that with Michael if you.
Yeah, that'd be great.
That would be great.
Yeah, because actually it's appropriate that they do have it within a different group. You do not want your auditors doing the
Right,
internal
exactly,
controls audit.
Right.
Exactly.
Auditing the auditor. Okay. Anything else before we adjourn? Okay, well, this has been very helpful. I appreciate all the input, the dialogue. And these are all important points. And so Dale and Shannon, just to loop back to the document amendments, you guys are gonna work some magic on the editing and then send it around to us?
Yes, sir.
Okay, wonderful. All right, unless there's anything else, I'd like to move for adjournment. All in favor? All right, thank you very much, guys. We'll see you next month.